Hi, Marcel. Nice meeting you here.
Absolutely.
Finally, we made it.
Yeah, pleasure.
And a very heated backstage chat, but I think we have to continue it on the stage. And let's just start. I have a lot of questions for you. And question number one is more about the restrictions, government, policies, and you are someone who focuses on policy mainly. I had a question. Today, I think we see like two kind of genres of the policy making. In one side, we have, today we are in Dubai, we have Dubai's WARA or Abu Dhabi's ADGM, who is more of like a welcoming and embracing the technology. On the other side, we have SSE, who is more running after the crypto, blockchain, and entire industry. What's your take on the policy making, and what is, in your opinion, especially from the investment and industry point of view, what is the best way of governing?
I think it's certainly from a U.S. perspective one of the most important questions that I think we can ask. And I would start with a very, very big picture here, and think of the Bank of International Settlements and how they look at integrating new technologies into the financial sphere. And the overwhelming principle that they run themselves by is you need to be agnostic to the technology, which means you can't judge something for its effectiveness or efficiency by whether you like it or not. You may prefer stores to internet purchases, but you can't regulate internet purchases just because you like stores better. That would not be neutral to the technology. So the BIS has taken a public position that you need to be agnostic to technology. So I think we have to accept that that's where we're going to end up. Now, the pathway of getting there is what? You can either go by principles or rules. Plenty of places have gone by rules. Some have gone by principles. Some have taken a combination of those two. I think what you're seeing in the US is an oversteering and overreaction to past problems. FTX was a great embarrassment to the US political and regulatory system. So now you have this oversteering where they say, look, we now need to be extra careful that that doesn't happen again, which slows everything down. And then you have other regions that were perhaps more alert to the risks that were germane to that boom market that are saying, okay, now we've culled those risks. What's left over? What's left over is a stronger ecosystem because the bad stuff has now been expelled. So what's left over is a much stronger ecosystem, a resilient ecosystem that we can then build upon. So I think that's the division that you're seeing. The regulators that were stung less by a lot of the pain in 2022 are now more open to taking a stronger foothold in the future of finance through digital technologies.
I asked this question to Grace Chan of BitGet, and she had a very good answer, and she gave an example of the European Union's MiCA, and she mentioned that it's very comprehensive, but it sets the boundaries very clear. You know what is there, like what needs to be done, and I think that's one of the biggest issues, both like in countries that really embrace it. They are like very vague in terms of policy setting. They kind of allow more things. On the other end, as you mentioned, like SS is like super strict in terms of regulation in order not to have another FTX case happen. I don't think even like the policymaking can, actually, because financial industry, we saw like a Silicon Valley Bank to crash down in a day. No policy could save that. How would you be saving another FTX case? Like, what do you think? What could be an ideal scenario of controlling and regulating an industry that has in the core decentralization?
Yeah, I think, look, it's a super important point. I think to scale, you have to enter the regulatory mainstream. So it's not to say that pure decentralization can't exist, it already does, but you're going to have limitations. And I think of some of those limitations and I think of how they're being implemented. Take, for example, MakerDAO, a remarkably successful case. It not only survived but thrived during the crisis of 2022 in all but one manner, AUM and its value. But from a risk management standpoint, MakerDAO and DAI, its stablecoin, performed remarkably well. Dynamic risk adjustment, so on and so forth. So we know decentralization works. Now, to scale, it has to enter the regulatory mainstream. It just has to. For you and I to be able to use this with regularity, you need, with finance in particular, you need regulators to understand how to bring it into the mainstream. And that, I think, is one of the biggest challenges. So if we take the European case, they've gone through very specific rule-based policies, and they feel like, we've got it. We've got this right. Now, you've never got it, because what happens? Then people look at Europe and they're like, oh, wait a minute, I can gain regulatory clarity in Europe and operate my activities offshore. And sure enough, EU regulators are now warning about this potential outcome. They're like, well, that's not the intent of policy. And it's like, it's not the intent. So rules will only take you so far. To enter the regulatory mainstream, I think it's going to be incumbent on industry players to understand where regulators are coming from and kind of take them step by step. Now, one tangible example of where that can happen. Imagine we have this decentralized rail that's operating as we hope it to operate, without intervention, peer-to-peer, so on and so forth. But we need to make sure that the people in the sandbox using those tools are known to the regulator. So you create a permission layer. And the permission layer initially is off-chain, defined by the regulator. Over time, as that regulatory purview, the logic of that regulatory purview is understood, it's formed into a smart contract and becomes a source of on-chain regulation. So then you're completely decentralized with this permission layer. So I think that would be a micro example of where we could head in the context of regulation, decentralization, and scale.
You sparked so many questions in my mind, but I think one of the biggest question, and also with my friends in the DAO sphere, we always discuss it the same way democracy fails because people just don't show up for voting. The same way we saw a lot of DAOs fail because not everyone has the same incentive to even participate in that, regulatory self-decentralized organization or even to achieve the consensus. What do you think, maybe having a regulation can actually help us to build trust and help to intervene to situations where decentralization doesn't work? Or you think at some point the regulatory body should fully disappear from the system and all go on smart contracts?
So I think it's inevitable that the regulator will want to use these tools to define their logic. Why wouldn't they? And then the logic is dynamic. So the same way that we have regular FOMC meetings to decide what we're going to do with interest rates, we don't make those decisions every day. We'll do the same thing with regulatory policy. We'll say, okay, we're going to meet every quarter just to make sure everything's working the way we want it to work. And if it's not, we're going to change the logic and then let people know. The same thing we do with fiscal policy, so on and so forth. So I think bringing regulatory logic into a smart contract sphere is just too compelling for it not to happen. It'll take time, but it'll happen. Where it gets tricky from an ecosystem standpoint, go back to biology 101. The guaranteed path to extinction is the absence of biodiversity. So a lot of the DAOs that didn't make it, they didn't have enough biodiversity. Now, it's okay. The idea that this is somehow a failure of the DAO, I think, is foolish. We're so young in this process that if you think of it differently, that they just didn't get a chance to mature. They didn't have biodiversity, so when you struck it with disease, it died. This makes perfect sense. This is evolutionary theory 101. So then what survived, I think, matters more than what didn't. And the lessons you learn from what didn't survive is the absence of that diversity. And as you scale, you're going to end up with more diversity in the ecosystem, and you're going to end up with more resilience. And I think that's where we are now. We come out of 2022, we shouldn't be looking in the rearview mirror saying, oh, this is a bad outcome. The market did exactly what it was supposed to do. It exposed weakness and culled it efficiently. It's exactly what policy doesn't allow to happen in traditional markets. You just bail everything out. Well, that's just a generational problem. In this case, we culled the bad items, and then by definition, what we're left with is something much stronger on the other side.
I think you mentioned a very important point that like the traditional policy making doesn't allow and bails things out. And I think the great example of it is the A4 paper, right? Before there was a paper, then all the PDFs and scanning came, but we still operate in A4 frame for almost all documents in all governments across the world. It's like so unified. And I'm sure like if you go to a standard organization and try to explain them a smart contract, they will think of that A4 paper. Like they can't think out of that A4 paper. Like how do we bridge these two different ways of thinking into policy making? And just a small remark, I'm sure we all watch these depositions at the Congress of, I don't know, TikTok Zoo or Mark Zuckerberg, and the questions that were asked to them were like so basic that, you know, like in usual mind, 15, 16 years old would never ask. And then you have this like 60 years old white man asking some very ridiculous question that he doesn't even understand how smartphone works. And now how would you explain them blockchain works that they can create a policy to control that?
This is, there's a lot to unpack there. There's a lot to unpack. So let me deal with the latter point first. I mean, I think it takes patience. I think user experience is very important. So we all drive cars. I'm pretty sure that we all forgot exactly how they work. And in an electric car, I'm certain none of us know the complexity behind these vehicles, and we love to drive them. I don't love to drive, but as a general matter, we love to drive them. So if you think of the complexity of the tools that we use in our day-to-day life, I don't think it's unusual for us not to have that microcosm of knowledge. So then if you have an advent of a new technology or a new tool, I think it's incumbent on industry players to explain it in a way through a user experience that's compelling. And once you have that user experience that's compelling, it'll start to permeate into the regulatory body. Not because they necessarily understand it or are able to ask better questions, but they're actually using the tool. So Uber would be a great example. Uber doesn't require any capital. They're just renting my car, and they're paying me a wage for that car rental. So it's a very simple and elegant way of taking the internet and turning it into a practical application that is much, much less capital heavy. So if we can explain that in a way where a senator or whomever it may be that doesn't really want to understand this stuff carefully, just wants to know that it's safe, wants to know that there's a practical way of using these things, then we're in really good shape. So I think, certainly on that point, I think it's very important that we just exercise patience with the people that aren't there yet. And look, they may never get there. Warren Buffett calls Bitcoin rat poison. I mean, and there are plenty of companies in his portfolio that produce food that is not good for us. And he's declaring a technology as rat poison. So don't be upset by that. Just recognize that he hasn't embraced the technology, has not seen the proper use case to be excited about it, and he can change his mind the same way that Larry Fink changed his mind with BlackRock. So I do think we need to be very persistent, patient, and clear in how we approach this from a user perspective.
Honestly, there's no way that I'm like a digital anarchist or something in that, you know, lines. But also, I do not trust governments in terms of policy making when it comes to like a new digital technologies. And why I'm saying that, because crypto industry came and first they didn't like it, then they were okay, we need to kind of embrace it. Especially we see that like how USDT has more volume, more than Master Visa card altogether. And then what happened, governments went on and issued their CBDCs. And SWIFT system, an amazing one, talks to each other. You can easily transfer money across the globe, right? But now with these CBDCs built on different blockchains and different contracts and different logics, they are not even able to talk between each other. And you can't do a cross-border transaction using, I don't know, UK central banks and US's digital currency. Like, they're actually like taking the logic, implementing it in the wrong way, and kind of causing a chaos for themselves than anyone else in order to compete.
So we have a tangible example that we can refer back to But let me deal with it at a high level first. I think it's great that the Bank of International Settlements and local central banks are playing around with the architecture. I think it's very important. They're going to learn more. They're going to see the limitations. They're going to see where they could use decentralized tools more clearly. So I'm all for it. I'll take a very strong position on this that ends up being incredibly simple that I've shared with any policy official that's playing around with CBDCs. They will not scale. They just won't. Because if you think of it in a financial stability standpoint, in the event that bad things happen in the banking system, who do you want to face? JP Morgan or the Fed? I guarantee you it's the Fed. So if the Fed allows you to face them through CBDCs with unlimited quantities, you're going to entice a bank run to the Fed based on the CBDC tool. Why? Because it'll be the super senior asset within the ecosystem. It's guaranteed. JP Morgan Deposit is not. So how do you prevent that? You put a cap on the amount of CBDCs that any individual can hold. That's exactly what the ECB is going to do. Well, once you cap it, what's the point? So I can hold $200 in a digital wallet that I can go buy bubblegum with, or I can have 200 euros in my pocket and buy bubblegum with it, or I can use my bank card. I mean, the use case ends up being meh, and what do we see in China? The use case is meh. Not many people are embracing it. So that's at the high level, how I would think about the CBDC architecture. Let them do it. This is great. We're getting exposure for the space to the tools. Now, a tangible example that is fascinating. We all know Jamie Dimon's pronouncements regarding crypto assets. He's not a huge fan. Maybe he's going to change his mind, but he's not a huge fan. There's a group called Onyx within JP Morgan that's done really amazing work, and they keep progressing, right? 2016 to 2018, JP Morgan was going to build an independent blockchain, their own blockchain. What did they end up with? They ended up with a permission blockchain called Onyx, which is 99.99% Ethereum, run by consensus. So in the end, through all that work and all that effort, where did they end up? They ended up with Ethereum. So is it bad that they didn't start with Ethereum? It's totally fine, because they discovered over time that why on earth would we do this twice? You know, it's excellent infrastructure. So let's use it and make the addition of the things that we want to see. And now you have JP Morgan doing all sorts of interesting things in the space. And one step further, JP Morgan has a trademark on a digital wallet that is a pure crypto wallet. And that came out last year. So there are all sorts of things that are going on that will just take time and patience to resolve. But on the central banking thing as a broad measure, let them have at it. I think it's great that they're engaging with the space, and I think it can only be good for the utilization of these technologies.
And what's your take on people running after the money? I know that crypto industry was from the beginning, the narrative was like a get rich quick kind of mechanism for the retail users. But now we see with applications for the ETFs, like people, as you mentioned, changing minds and trying to embrace, but more than embrace, just kind of run after the money. Do you think this money sentiment in the center of the entire technology could take it further, or it needs kind of a rebranding? And why I'm saying this, because it took more than 10 years for Bitcoin to have 100 million adoption, while AI technology, like even ChatGPT, had it in 2 months.
Okay, let me paint a scenario that I think should be front of everyone's mind, that I think is kind of dismissed. Think of PayPal and stablecoin. So back of the envelope, I figure if PayPal integrates stablecoin into their platform and it's static, they'll make an extra $1 billion. So it is a super compelling piece of technology for the business that they're in. And they might single-handedly become the most dominant stablecoin adopter in the ecosystem overnight. Now, the SEC is trying to slow it down. It's actually a great example of the regulatory friction. PayPal reported their earnings on November the 2nd. They introduced their stablecoin in August. The SEC put a subpoena on PayPal regarding their stablecoin on November the 1st, the day before their earnings. Now you tell me they didn't have enough time between August and November the 2nd to provide the subpoena. Of course they did. I don't think PayPal was surprised. I certainly wasn't. I mean, this is going to be met with a little bit of friction, and I don't think it's malicious. I think it's to just slow things down. Let's make sure we're getting this stuff right. Now, let's imagine that world where you have all these great crypto asset technologies, and who benefits from them? Traditional companies. Because traditional companies figure out how to integrate them into the regulatory mainstream. So that could happen. It could be that the best way to monetize crypto technological rails is through BlackRock, PayPal, JP Morgan. I don't think so, but it's possible. And I think that's a possibility you have to have front of mind.
But also considering like US politics, I think that the companies have enough money to lobby.
They have enough money to lobby, and they have enough smarts to create these think tanks to work in this direction. I mean, if you haven't seen the work that PayPal has put into their communication on the stablecoin, it's brilliant. It's just really, really well done. So I would think of it a little bit in that context. And then on the chasing the money bit, look, I have never seen a cycle with great things where there isn't excess. It's okay. It's like human nature. Greed and fear is something we have to embrace. So the problem with greed and fear is that we don't embrace the fear. So crypto does. Crypto's a pure market. When bad things happen, things disappear quickly. This is a feature. This is a great thing that should happen. The people who are benefiting from the froth are the ones that are getting taken out. And this is part of the greed and fear cycle. You can't have greed without the fear. So you're going to have to embrace that component. What's happened in traditional markets? A bank fails, and immediately there's a unique credit line that's made available to them to make sure ordinary people get their funds back. Okay, those ordinary people in many instances were billionaires with deposits at this bank. So the beauty of crypto asset markets is the efficiency with which they call the excess. So should we be worried about the excess? We should. I mean, it's going to happen. It's just the nature of a free market is you're going to get these periods of excess. But the critical feature to follow from that excess is to allow the downturn to occur, to allow the cleansing of the market to occur thereafter. I think is very, very important.
To wrap everything up, one final question. If free market is able, and as we see so far it is, to self-govern and self-control and take that bad players through the collapses and through these viruses, as you mentioned, do we still need so much government interference?
Oh man, that's a really tough question. I would say the short answer is no. I think that where we'll end up with, so look, especially in the Western world, governments are very large. And the efficacy of policy is being called into question. Everything from monetary policy to fiscal policy to pensions to education, all of it's being called into question. So let's imagine there is some form of a reset. On the other side of that reset is what? Probably more rules-based. Why? Because the period of discretionary-based policy appears to be failing the general citizenry. So then if you raise your hand in the next election and say, okay, I've understood the limitations of us as human beings, so we're going to leverage more rules-based policy and more technologies, including that for money, I think you're going to do very well in the election. So I think of it more as sort of a natural outcome, as, again, something you have to embrace. When we make mistakes, you have to embrace that the way to fix them is to let them be exposed. And now they're being exposed. Fiscal policy in the Western world is on an unsustainable path. Full stop. The way out of that is probably very high inflation for a very long period of time. Maybe not hyperinflation, but high inflation. Again, full stop. The US is not defaulting on its debt. They're just going to pay you with money that's worth less. So then on the other side of that, once you get the cleansing, you probably end up with more rules-based policy, smaller government, leaner situation, so on and so forth. The tangible example that I think back to is, think of Estonia. The system is incredibly efficient. The innovation is tremendous. And it was born from a disaster in the former Soviet Union. And you can have an international business out of Estonia that with an e-card and super innovative. But to get there, we had to go through a lot of pain. And guess what? It's beautiful. It's a really lovely place to be. So I think that's where we end up. There's just never be short innovation is where I come out of all this stuff. Because innovation will carry us forward.
A great answer, and I really love Estonia case because I think Estonia case is a great example that they didn't evolve, that when Russia left, took everything out, they left with nothing and they built it from the ground up and they wanted to build something unique, different, and something that no one can take away from them. And they ended up in this beautiful system that they have. And I think blockchain should do the same without like building on existing policies or existing anything, should embrace that, whatever we have. And I always say whenever I go to a crypto event, I tell like, we talk about NFTs, why don't we have tickets on NFTs? Why do we still use barcodes, right? Why we don't sell it? And so many things that we really need to embrace and kind of build it, not like a thing as an evolution, but actually build using the technology, having the smart contracts and having all the payments within the blockchain ecosystem in order to make sure that we really embrace what we are preaching. Otherwise,
let me finish with just one last thought as a follow-up to that. So a lot of the uncertainties on regulatory policy, how it integrates for crypto technologies, and so on and so forth. And how does that evolution happen? I think it happens with industry working with regulators. And what the Estonia case reminds me of in the context of crypto technologies is exactly what you're seeing in the UAE. It's not that regulators here are easy. This is a false impression. Regulators are really careful here. They want to be sure that what you're doing is safe, sensible, scalable, so on and so forth. But they will work with you. So with that amount of energy that the creators are putting into it and the regulators are pulling from it, you can end up in a 3-year period with a vastly improved financial system that is then ready to scale. So the one interesting thing in the context of the UAE is this is exactly how our impression, exactly how regulators are approaching the problem. It's exactly why I moved here. I mean, we were building our tools for the purpose of North America largely, and FTX slowed it down. It was very crystal clear that that was a hard stop. And then we started looking around the world as to what regulators we could work with to embrace our technological stack for the purposes of new finance. And this was, in our judgment, the best one. So I think the case that you're seeing in Estonia from an earlier technology and efficiency standpoint, I think you're living here in the context of crypto asset technologies.
That's a very beautiful ending. I don't think we need to say much. Thank you for your talk, Marcel. We were discussing how to regulate this industry with a decentralization in its core, and I think we can have a small consensus in here that we don't need too much to do, but as a great example serves, both legislators and the people who are actually on the grassroots building the technology should work together with each other.
Great chat. Really
Thank you very much. Thank you.